Hello, good afternoon, everyone, and welcome once again to today's episode of Modesty's Property Corner. This is another Wednesday, another beautiful week, another opportunity for us to come here today and educate ourselves and learn a thing or two. Of course, you know, I remain your man, Ikenna Umezudike, and this is Black History Month. It is a month we celebrate the Black heritage, the Black community, the Black race, the Black man, the Black woman, everything that makes this black skin thick and very, very proud. So, in continuation, did I say black skin? I keep doubting myself because a few people have told me that I don't look like a Nigerian. I don't look Nigerian. The only thing that gives me away is my accents, you know. So even if I want to fake it, I can hardly fake it because I really cannot. But then I cannot deny my heritage. I cannot deny my roots. I cannot deny my background and my origin. I am a Nigerian. I am black and I am proud. All right. So in this Black History Month, as part of our contribution towards the enrichment of the Black history and the Black heritage, we are continuing from where we stopped last week when we were discussing the Black community's attitude to insurance, right? And today is the second part of that discussion and that conversation. So last week we reeled out a few statistics suggesting that the attitude of the Black community to insurance is not really as bad as people make it. And we used statistics from the US, where we were able to demonstrate that about 56% of the Black people in the US have life insurance. But then the penny dropped. That 46% of the insured people, of the insured Black people in the US are actually underinsured, because their insurance could barely just take care of their funeral commitments and their funeral expenses. So that leaves their generation with little or nothing to go home with after their parents or their carers have left this planet. So it brings us now to today's main focus. So we're going to be focusing on two things today. We're going to be focusing on why should Black people actually really go for insurance. Why should they bother about insurance? And then we're going to be looking at the solutions to the challenges that we enumerated last week. Last week we mentioned a few challenges to the Black people's attitude, or some of the things that really hampers the attitude of the Black people through to insurance. We mentioned things like, you know, lack of trust in the financial services industry by the Black people because of the way they have been treated before. We mentioned things like financial constraints, you know, because of the way Black people are denied opportunities to make as much money as they should, and a lot of them are struggling financially, and they really cannot see any value or any benefit in spending part of their hard-earned money, which is hardly enough for them to feed their families, to devoting some to insurance to actually take care of the future, because they are more worried about the present, and then you are telling them to secure the future. It doesn't make sense to them. So those are some of the challenges that the Black people were facing, and some of the things that were hampering or stopping them from you know, pursuing insurance. We also mentioned things like the communal life that the Blacks were used to, where if somebody dies, their family members will take care of their, you know, surviving families. You see extended families, you know, taking care of the children of the deceased through school, taking care of their widows and all that. So that communal life. And some people just felt like, even if I'm not here, my extended family members will take care of my children. There was also the issue of religious affiliations, where because we believe in something, we strongly believe in that thing, we believe that our faith is enough to carry us through this world and beyond. And then we forget that when we die, we leave our faith behind, and the faith we have does not carry on looking after the people we leave behind. And apart from that, our faith does not interfere with reality, because reality is there, and the reality is that life happens. People fall sick, people get injured, people get involved in accidents, people die. That is life. Okay, so faith doesn't take care of. So these are some of the things that we mentioned last week. Today we're going to be looking at why should the black people embrace insurance. Secondly, what are the solutions to these challenges that we pointed out last week. So let's start with why insure. So to the black people, or to my fellow black community, why should we insure? Number one is that insurance creates transferable wealth. Insurance creates, I'm talking about life insurance, yeah, or financial protection, like we call it in the traditional parlance. Financial protection. It creates transferable wealth. Your policy, your life policy can be transferred to your generation. It is part of your estate. It is something that you can hand over to generations that are coming behind, that are coming after you. Your children can actually use your life insurance policy that you have left for them to further their education. Your grandchildren could actually benefit from your life insurance policy. You could build it into your into your will, to say, if I'm no longer here, I have a life insurance policy worth, say, £500,000. Set aside £100,000 of that money for my grandchildren. If you have their names, you can even name them. You can name them as beneficiaries. You can name them in the will. You can will that life insurance policy to them. It becomes the wealth that they will inherit. Imagine if you are no longer here, but you are still able to educate a lot of people while you are still not here, because you have left that tangible thing called life insurance policy. That document, that commitment you were making all through your life while you were here, somebody benefited from it. And that thing is transferable. Okay? That's number one. Number two reason you should embrace insurance as a black person. When I talk about transferable wealth, let me even talking about this transferable wealth. You see, on Monday, when I was doing my Modesty's Money Masterclass program, I was addressing the issue of the wealth gap between the blacks and the whites, especially in the UK, where we pointed out that for every £1 that a white family has in wealth, the black Caribbean or the black African person has between 10 to 20p. So the white family are 8 to 9 times richer than the black family in the UK. And I did say it is not the fault of the white family that they are 8 to 9 times richer. It is just what the system has denied the black person in terms of opportunity. That's part of the problem, but that's not the only problem. But if something systemic is denying somebody opportunity, let's say in most of the deprived areas in the UK, you can find mostly black people, go to parts of London where most black people live. It's one of the most deprived areas in London. I also live in Luton here. Luton is one of the most deprived areas, or one of the deprived areas in the UK as well. And there's a huge population of black people and Asians in Luton as well. So sometimes, the system doesn't present the black community with the opportunity they are looking for. But what do? You create your own opportunity. If the system does not present you with the opportunity, create your own opportunity. And one opportunity you can create for yourself as a black person is to embrace life insurance. That even if I couldn't make this thing happen in my lifetime, I can make it happen for the generations to come. That if they inherit something that is tangible, something significant as my life insurance, then that educational opportunity that I didn't have, they can have it. That business I could not run, I didn't have the opportunity of having a successful business, they can use that money as a seed money to set themselves up in business. They can use that money to achieve what they want to achieve. At least it presents some kind of equal level playing ground for everybody. You have given them heads up by presenting to them that transferable wealth, so that when others are inheriting things from their parents, they can also inherit that from you. In fact, when one of the statistics from Bloomberg that I also talked about on Monday mentioned that the median wealth that is acquired, that is inherited by the black person, the median wealth that is inherited by the black person through properties in the UK was 0. And then compare that to the median wealth that is inherited through property by the white person is £115,000. So you can see the disparity, 0 to £115,000. But that is wealth through property. But if property is too expensive, if you cannot bequeath property to your generation, you can buy a life policy worth £500,000. Somebody who inherits property worth £500,000 and somebody who inherits life policy worth £500,000, they're all inherited. These are physical cash. This is real cash. This is real money that we're talking about here. It's the same thing. So maybe you may not have the ability or the capacity to, bequeath your generation a property of £500,000. How about a life insurance of £500,000? That is sizable. That is significant. That can make a huge difference in the lives of a generation to come. So life insurance creates a transferable wealth. It's a wealth creation mechanism that the black community can embrace and use that to close the wealth gap between the black community and the other ethnicities that exist in the UK or in the West, in the modern world. Number 2 is that insurance looks after your family when you cannot. Insurance looks after your family when you cannot. When we talk about insurance, it's not just life insurance. When I recommend insurance to the clients that I do their mortgages for example, there are 3 major insurance policies that I do recommend to them. One is life insurance, the other is critical illness cover, and the other is income protection. So when I say that insurance looks after your family when you cannot, apart from life insurance, what about when you fall ill? When you fall critically ill? Critical illness cover is a bigger risk than death. You are 5 times more likely to suffer critical illness than actually die. Which is why when you go to arrange insurance policies, critical illness covers are sometimes more than 3 times more expensive than life insurance. They're very expensive because the risks are more likely to occur than life insurance. But this is something that a lot of black people do not understand. They only focus on life insurance, thinking that, is it not life insurance? It's just about death. So if I don't die, not gonna. No. While you are alive, there is a policy called critical illness cover that pays you out a lump sum when you fall critically ill. Maybe cancer, it might be stroke, it might be major operation, it might be spinal cord injury. There are several critical illnesses that permanent blindness or even partial blindness sometimes, deafness, even mental health in some cases. So these are situations that you have no control over. And I was talking to one of my clients the other day, and I said to them, you are maybe just one fall away from falling critically ill. Maybe a slip on the stairs while you're walking down the stairs in your house and you hurt your spinal cord. That is critical illness. That is you done. You might spend the rest of your life in bed, being bedridden because of that. You will not be able to work. You will not be able to do all the things you're able to do every day. Your home might need to be remodified because of that. That lump sum you get from the insurance company can take care of the remodification of your home, can take care of any medical expenditures that you need. Even if you need to travel outside of the country to seek medical help, you can use that money for anything. Above all things, it can bring some kind of financial normalcy to your family while you're still struggling with your health. And when that happens, that insurance is already taking care of your family when you cannot. So it's part of the whole package of the insurance taking care of your family when you. So it's not only when you are dead that insurance helps you. Insurance is not just about death. It's not all about death policy. There are also insurance policies that are useful to you when you are alive. Because that, for example, that critical illness cover looks after you when you're critically ill. And if you recover from that illness, you carry on as normal. And as long as you keep paying your premium, that critical illness cover will still remain there. As long as you keep paying your premium. So it's not a policy that, oh, because you've been paid out, the policy is gone, and therefore you don't have it. No, there are insurance companies that when you survive a critical illness cover, as long as you keep paying your premium, you can even top your insurance, that cover up again. If, for example, you had £300,000 critical illness cover, and you fell ill, and they assessed that illness, and maybe they said, okay, you don't need the whole £300,000 to be able to survive this level, this stage of that illness. Maybe you need £50,000. £50,000 can help you get through this stage, and then let's see what happens after this. If after that stage you get better and then you get back to work, you get back to your normal life, £50,000 have been spent out of your £300,000 worth of life cover. You have £250,000 of that worth of that life cover left. You have an option, if it is built into your policy, to top that policy up again to bring it back up to £300,000. If your policy allows, you can do that. So that tops that up again, and that policy is back to where it was at the time you made that claim. So there are various things and various aspects of, protection plans that a lot of us do not even know about. And it is only through mediums like this and education like this that we get to understand that, look, insurance is beyond just life insurance. So number 2 reason why you listening to me as a black person should embrace insurance is because when you cannot look after your family, insurance ensures that your family is looked after. Whether it's due to incapacity, due to you being incapacitated due to illness, or you dying and not being there for your family, your policy can do the things that you cannot do at that point in time. Number 3 reason is that insurance offers you relief in times of trouble. Insurance offers you relief in times of trouble. Just take, for example, the critical illness cover I talked about. You're lying on your hospital bed, maybe dealing with stage 1 cancer, with all the mental and psychological pains that comes with that, and then the chemotherapy and all the treatments and all the physical strain it's taking on you. And then you still have to worry about the financial side of things in your family. The bill still has to be paid. The mortgages still have to be paid. The children still has to be fed. Your wife still has to be taken care of. Financial commitments that you have still have to be met. How on earth are you supposed to cope with all that? And you are ill. And then there is a real threat that if you don't pay that mortgage, your family could be thrown out of the house and that home could be repossessed by the bank. How on earth are you supposed to be dealing with that illness and be dealing with such strenuous situations and the threats and the psychological pain that comes with it? That is where your insurance comes in handy. Because you have an insurance policy, and if that insurance policy is enough to at least pay off the mortgage or pay off a significant part of the mortgage, right? That gives you relief at that point in time, because at least my family cannot be kicked out of the home. They have a roof over their heads. The bills can be paid. Food will be on the table. Things will be provided for, while I focus solely on getting better and dealing with these physical or mental ailments and getting myself back onto my feet. How relieving is that? If you have a family who knows that they don't have to worry about money for now, they have to solely focus on helping you get better. That is a huge relief to you to know that because I put this arrangement in place, at this point in time, it has come in very handy, and I'm going to focus on one thing, and I'm going to focus on that thing, and just to get better. So the relief you get from knowing that things are taken care of, it's unquantifiable. You cannot quantify that in terms of money. And in the even if it's in death, the relief you've given to your family, knowing that I'm no longer here, but I'm still here looking after you guys. The relief from your family to know that you've already taken care of their issues and their worries through your life policy that they have inherited, it's unquantifiable. So when we say that insurance brings relief in times of trouble, it does in practical sense, and in every practical sense of it. Number 4 is that insurance offers you peace of mind. You can go to sleep and sleep tight and sleep well, knowing fully well that you have taken care of things. You are not worried about your children not studying to whatever level they want to study. You are not worried about your children feeling that they have not been looked after and they have nothing to hang on to. You are not worried about your family being thrown out into the streets. You are not worried about your family going hungry. Go to a lot of African homes in Africa, where I come from, in Nigeria. Because of lack of insurance, because of lack of financial planning like this, a lot of families that had rich parents became penniless, became poor, became the definition of poverty, because there was nothing left on ground. And there are certain African traditions and cultures that are so embarrassing, that when a man, for example, especially among men, when a man dies and leaves his family, his kinsmen, his brothers, will pounce on his wealth and his properties and take everything and tear the whole thing apart and leave the woman and the children penniless. If you had a life insurance where you know that the insurance company will honor that obligation and only your family are entitled to that wealth, at least, even if they lose everything, they cannot lose that policy. The policy will be there to protect them. They will inherit that policy, and they can use that money to start life afresh, even if the vultures around them take over everything. So you are left with that peace of mind that no matter what happens, this policy, this financial arrangement I have made is solely accessible by my family and solely for the use of my family, no matter what happens. That is a definition of peace of mind. Number 5 is that insurance is part of your estates, and it gives you sense of self-worth. So if you have insurance policy worth £500,000, for example, you are worth £500,000. It gives you a sense of self-worth. It becomes part of your estate. If you want to write a will, that is enough to go in as a will. If you die today, the government will recognize that insurance policy as part of your estate. If you put that insurance policy in a trust, it will become easily accessible straight away by your family and for your family, for their use. If it's not in a trust, the government will look at that policy and say, okay, it's part of your estate. When we are doing your inheritance tax calculations, we are going to build this policy into it. So if you have a house worth £300,000 and you have an insurance policy worth £500,000, my friend, your net worth combined is £800,000. That's what it is. So if the government wants to look at taxing you when you are gone, inheritance tax, they will bring the whole thing together and say this man is worth £800,000, this woman is worth £800,000. So if we take away the threshold of £325,000, we can tax the rest. So you can see it gives you a sense of self-worth, because that is part of your estate. That is part of what your family can rely on and they can lean on to for life after you. Number 6 is that insurance provides you income when nothing is coming in. Remember I mentioned income protection. If you have any kind of income, whether you're self-employed or you are employed, any kind of income at all, please protect it. Use income protection. What income protection does for you is that when you are unable to work due to illness, accident, or injury, that income protection kicks in and starts paying you a significant percentage of what you're used to, what your income is at the time that you're unable to work, until you're able to get back to work. That means your mortgages can still continue to be paid, your bills can still continue to be paid, your financial commitments can still continue to be met until you're back to work. Now, if you have set that policy to run for up until retirement or a certain age, say 70, and you're unable to work for the rest of your life until that age, that policy will keep paying you that amount until retirement. So guaranteed, even if that illness has meant you can no longer work again, because you set that policy up, you will continue to earn that money for as long as that policy lasts. How fulfilling is that? How satisfying is that? How relieving is that? How can that not give you confidence and peace of mind, knowing that you have secured your income, you have protected it, and in the event anything makes that income to stop coming in, you are in a position to be able to fulfill your financial obligations. Number 7, is this number 7? Yeah, number 7 is that insurance, number 8, insurance brings some normalcy, some sense of normalcy to life when it is needed. There are certain things that happens around you in life and it looks like life is gone. It looks like life is meaningless. It looks like everything is abnormal. Take for example the critical illness I was talking about. If you were diagnosed a stroke, for example, and you'll be thinking, that's me done. I can no longer do anything again. I cannot move around again. What that critical illness cover does is that when you pay that lump sum, you can use that lump sum to bring some sense of normalcy to you, as close to normalcy as possible. Even if you cannot get yourself back to where you were at the time, you can get yourself close to where you were at the time. If mobility becomes an issue, you can use that money to actually modify your home so that you can install mobility facilities in your home to be able to move around your house when you want to. You know, like the staircase, you can put a stair lift or your staircase that can take you from point A to point B to your stairs. You can remodify your bathroom in such a way that you'll be able to have a shower that suits, you know, your present condition. You can take yourself on holiday just to give yourself that mental balance and that satisfying feeling. You can bring as close to normalcy to life as possible because of that. That is what insurance policies do for you. So, my friends, insurance policies that we used to think was just a meaningless sacrifice we make to insurance providers. It is not. That is an investment you're making. That is hi Silas, thank you. That is an investment you're making into securing something that you have no control over. It gives you an element of control. So thank you so very much if you've joined us today, and trust me, next week we're going to come back with solutions to the challenges that the black communities used to face in arranging financial protection for themselves. I hope these reasons are enough for you to consider embracing insurance, especially within the black community, because this is an opportunity and a mechanism for us to close the wealth gap. If the systems are kind of unfair in one way in certain situations, you can create a system for yourself that will be fair to you and to your household, and you will not regret doing that. God bless you all, and I'll see you again next week. Take care. Bye now. Cheers.